All right, guys, something I want to talk to you guys about real quick is the Greeks. So pretty much the Greeks are a factor that you could use to determine how your option contract is going to be affected. So for example, to determines how much your option contract is going to move every dollar your stock goes up or go down. Theta determines how much your option contract is going to lose each day it goes by. Personally, I use only delta and theta because those are the most important thing to me that I need to know about my option contract right now. I want to talk about expiration date. Placing expiration date, it can be very dangerous, guys, because theta determines how much your stock could lose. So you can lose a lot of money quickly the closer your expiration is to strike price. So personally, now I like a lot of leaps. As you can see from my example that I showed you guys, that has helped me gain a significant amount of profit. Leaps are pretty much long-term equity anticipation security. So you pretty much buy an option contract for about a year or so out. Personally, I like Leap because you have more time on your contract, guys. You remember what I said about the Greeks? If you have theta, you can lose a lot of money quickly the closer your expiration is. When you have a leap contract is further out, you have to sell it within 3 months, 6 months, 1 month, depends on where you want to get out of the contract, guys. The key thing is that you have time. You have a lot of time, so you're not gonna lose, your money's not gonna lose a lot of value with theta. If you guys are interested in more information, let me know down in the comments below. I'm also making a course that you guys could get a lot more information about option trading and explode your account. This is some more strategies that I personally use, increase my outcome. Is glory. Peace.